so tax planning opportunities. So what we're talking about here are for bonuses. Basically, how bonuses work is once the bonus is declared, it has to be paid within 180 days in order for the bonus to be deductible by the employer. If it's paid after 180 days, then the employer would be able to deduct the bonus in the year it's paid. Does that make sense? Okay. So that's basically that there. So if we were to do an example here, let's say, okay, before I came here, I worked in property management. I'm gonna go over here. So I worked in property management before I came here, and the place I was working at declared a bonus on, let's say 30th of November, 2020, let's say. So if we're on 30th of November 2020, that's our year end. Let's say on this date they declared the bonus for like, I don't know, $1,000 or whatever. Okay, they have 180 days to pay that. So, what's 180 days after that date? We just look at our day and time calculator. We go in here. Okay. Okay, so let's say we're on, if this thing will work, November, oh come on, 30, 2020, we're going to add 180 days. Okay, so this means that the bonus has to be paid by May 29, 2021. That's 180 days after this date. If it's paid on May 30th, 2021, then that's 181 days, and therefore the bonus would not be able to be deducted in 2020. It'd have to be deductible by the employer in 2021. Does that make sense? Okay.
By the employer.
Yeah, because the employer has an expense, which is your wage or bonus or whatever.
Okay.
So must be paid in 180 days. Okay, which is 29 May 2021. If paid after, it's going to be deductible to employer in 2021. So if the bonus is paid between 30th of November 2020 and 29th of May 2021, it's deductible in 2020. Does that make sense? So paid in this time frame, it's deductible in 2020. Okay, so is that clear for everyone? Yeah. Okay. I just use these days because that's when I was working at the company, so. Alright. I started teaching here in 2021. Alright, so does that make sense for everyone? Clear? Okay. For current slide. Okay. Yep. Okay. Let's do this example here. Okay, on December 29, 2021, Martin Enterprises, which is a sole proprietorship, declares a bonus of $20,000 payable to Roger Jones, who is a valuable employee of the business. The bonus is paid on January 21, 2022. So what are the tax consequences of the bonus to Martin Enterprises and Mr. Jones? Okay, so let's start with Martin Enterprises using this logic here.
It's a deduction on the 2021 tax return.
Yeah, because it's less than 180 days. So the employer, Martin Enterprises, is going to get their deduction of $20,000, and they'll be able to deduct it in their 2021 year. Mr. Roger Jones, he receives the money in 2022. So because we're on the cash basis, he receives the money in 2022. Therefore, he's going to claim it on his he's going to claim it on his 2022 tax return, and he won't have to pay taxes on that until April 30th, 2023. So he has a long time to basically save up money for his taxes owing and pay it then. Does that make sense? Okay. Basically, this is how you guys want to do bonuses. In this scenario, Mr. Rogers will be paying taxes on his bonus no later than April 30th of 2023. So that's like 15 months away from when he received it. So that's pretty favorable for him. Does that make sense? Like he has 15 months to save up like maybe $3,000, $4,000 pay tax on that. So that's pretty good. Make sense? Okay. Here's another example. Nielsen Inc. has a September 30th year end. On August 1st, 2021, it declares a bonus of $100,000 payable to Sam Neeson, an executive of the company. The bonus is payable to Mr. Nielsen on May 1st, 2022. Okay, what are the tax consequences of this bonus to Nielsen Limited and Sam Nielsen? Using this logic and what we talked about before.
Scratch this.
Sorry?
For
Yeah, it's after 180 days, that's right. So what does that mean?
So it would be deductible in 2022
Yeah.
tax return.
Yeah, it's gonna be deductible in 2022 for the company. Company can't deduct the bonus in 2021. And Mr. Sam Nielsen receives the money in 2022, so he'll include it on his 2022 tax return. Make sense? Okay. Alright. So, employee versus self-employed. We're gonna have some fun with this conversation here. Okay. So, as an employee, you don't get very many deductions. The deductions that you can get are outlined in T777 form. So let's look at this here. So we know, open something. Okay, here we are. Okay. So you guys don't have to know the name of this form for this course, but if you ever get into public accounting, it's good to know what this form is. Does that make sense? Or if you have employment expenses, again, you should know what this form is. So, statement of employment expenses. So we can have like accounting and legal fees, advertising, promotion. A lot of this here pertains to if you have commission income, which we'll get into later on in this linear objective. But we have a bunch of examples here of different expenses. We have motor vehicle expenses here, so we can only claim the motor vehicle expenses up into and including the amount that we use the vehicle for business use. Make sense? Or employment use. We also have we don't care about tradesperson. This is beyond scope of this course. We also have home office. We'll be talking about that as well. So we can deduct home office if we have to work from home in some capacity. This was very common during COVID. During COVID, you could use either your actual home office expense, or you could use a simplified version, which is like $2 a day. Make sense? So that we don't really care about. But like I mean the COVID stuff we don't care about, but we will talk about home office. And then here we have amortization of assets. So we'll talk about that later on. That's for tax 202. Or 604, sorry. yeah, there's a bunch of classes I teach, and some are like basically the same. So, yeah, forgive me about that. So that's the employment expense. Now, in order for us to get employment expenses, what we need to have is for our employer to sign off on a form called a T-2200 form. Let's pull that up. So T-2200. What this form is just a form that we keep on hand. So we fill out this form, and your employer has to sign off on it. And what happens is when your employer signs off on it, that makes you eligible to deduct your various employment expenses. Does that make sense? It's very important because if CRA ever wants to audit you saying that, oh yeah, you can't have your employment expenses, all you can do is just photocopy this letter, or photocopy this form that's signed, send it off to CRA and just say, hey, look, I have this signed form from my employer and it allows me to deduct all these expenses, and so, yeah, they're allowed. And then CRA would be like, okay, yeah, sorry, I'm mistaken, and then hopefully they would allow them. Make sense? Okay, so, again, we don't need to know, we're never going to use this form in this class, but just keep it in the back of your mind that it exists. Make sense? Okay. Okay, so those are the deductions. Also, as an employee, we have taxes withheld, so our employer withholds money from our pay and sends that to CRA on our behalf. If we owe more than $3,000 in the subsequent year, then we have to make installment payments. Make sense? Good? Okay. Also, as an employee, we have to pay CPP and EI. We're going to be talking about CPP and EI more in LO4, but for now, we just as an employee, just know that we have to pay EI and CPP. Also, we have fringe benefits as well. So that could be RSP matching, that could be pension plans, it could be medical plans, use of company vehicle, all that stuff. Does that make sense? So those are fringe benefits. Also, as an employee, your employer sets your work schedule. I've obviously my work schedule right here. I'm teaching 5 classes. This is my work schedule, or at least, this is my work schedule here. Also, I have some other tasks to do beyond my normal work schedule. So yeah, my employer dictates basically what I do in my job and what class I teach. Does that make sense? If I was self-employed, then I wouldn't necessarily have that. Okay, self-employed. So if I'm self-employed, I'm not getting employment income, I'm getting business income. Does that make sense? So if I'm self-employed, I'm running my own company, I'm making business income. If I have business income, what I have available to me are a greater amount of deductions available. Now, with regard to self-employed, if we're self-employed people, that means that we are taking our sole proprietorship company and we're putting that on our personal tax return. So we're paying taxes on our profits personally. Does that make sense? Okay. The form we use for that is called a T2125 form. Now again, you don't need to know specifically what a T2125 form is, but if you get into public practice, then you should know what it is, and hopefully this thing will open up sometime today. Here we are. Good. So this is what we use for our sole proprietorship business income. So we filled all this information up here. That's just like the name of the business, that sort of thing. We put in our business income here, and then we would have our cost of goods sold here if we're selling inventory. If not, then it's blank, and we would just do our other expenses here. We have home office here. We have our CCA here, which we're going to be talking about in 604, and yeah, So does that make sense? So, we fill out this form and, it will go on, so this will go to, what, here. No, I don't want that, I want this, that. So, employment income goes in 10100. Self-employment income will go down here, where it says self-employment income. Does that make sense? Okay, so it's just reported at the bottom of page 3. Okay. Alright. With regard to self-employed, if you make a bunch of money and you have your, if you have more than $3,000 owing, then yeah, you're gonna have to make installment payments. You're gonna be paying tax regardless if your only income is sole proprietorship income, because nothing's being deducted from your income for tax purposes. You're responsible for all that. Does that make sense? Okay. Also, as a self-employed person, you can set your own schedule and you have to keep your own books and records separate from your own personal stuff. So business stuff has to be kept separate from personal stuff. So that's business entity principle. Make sense? Okay. If you're self-employed and you're contracting yourself out to an employer, the employer's not going to pay CPP, nor will they pay payroll taxes or EI. They'll just give you the straight amount owing without any deductions, and it's up to you to make those deductions. Now, with CPP, if you're a sole proprietor, you're going to have to pay your portion of CPP as well as the business portion of CPP. Does that make sense? Is that clear? Okay. With regards to EI, because you can't fire yourself from your own company if you're a sole proprietor, you can elect to pay into EI or elect not to pay into EI. Usually you will elect not to pay into EI, because if you do elect to pay into EI, you can't subsequently elect not to pay into EI later on. So you can't change your mind if you elect to pay into EI. Make sense? Good? Okay. So generally, you aren't going to pay EI. If you're self-employed, the employer's not going to give you any benefits. If you're making over $30,000, then as a sole proprietor, then you're going to be charging GST. Make sense? We're going to be talking about GST more in 604. Okay. Also, as a sole proprietor, if you're contracting yourself out to the employer, there's less of a commitment for the employer to keep you on. So, from a legal standpoint, it's easier for an employer or a business to get rid of you if you're a sole proprietor than it is if you're an employee. Does that make sense? Okay. Okay, so how do you determine if there is an employee or employer relationship? So, first off, the basic factor is intent. So, like, are you intending to work for this company, make money from them, that sort of thing. Also, we have a bunch of other considerations. So, the first one is control. So, what is control? Control means, like, can you set your own schedule? Can you determine how the work is done? That's where I think would mean control. If you have control over how the work's done and like setting your own schedule, that sort of thing, then that goes more in favor of you being self-employed. Make sense? Okay. Ownership of tools. So if you're contracting yourself out to the employer and you own your own tools, like let's say you own your own computer, laptop, you own your own supplies, then that also goes in favor of you being self-employed. Does that make sense? Clear? Okay. If you have the ability to subcontract or hire assistants, then that also shows that you're self-employed as well. Because if you're an employee, you can't hire your own assistants. Is that clear? Okay. Financial risk. So that means, as an employee, you basically don't have any risk of loss. The risk of loss is on the employer themselves. But if you're a sole proprietor, if you're working for yourself, then you have a risk of like not making any money and having a loss. Does that make sense? Clear? Okay. Responsibility for investment and management. So that means, like, for example, as an employee, you can't go to the president and tell the president how to like manage a company or how to invest the money, that sort of thing. So like I, for example, can't tell Dr. Rosia that, oh yeah, we need to build another building in Regina to house the school business. Make sense? I can't do that. If I did, he'd laugh me out of his office. Is that clear? So Dr. Rosia is the president of SAS College. If, on the other hand, I'm a sole proprietor, I can do whatever I want with the money I make. I can use it to expand my business. I can use it to buy cheese. It doesn't matter. Make sense? Okay. Opportunity for profit, basically the same thing as financial risk. So, as an employee, I don't have any opportunity for profit because that's all the business. If I'm sole proprietor, then yeah, all I have is opportunity for profit, basically. Make sense? Good. Okay. There is another thing I want to talk about, and this is coming more from a tax plan perspective rather than stuff that you'll learn in this course. So, because my background is public practice, that's why I did accounting for a bunch of years. I've learned a few things about employee versus self-employed. The company I used to work for, what they did was they hired a lawyer, and they hired a lawyer to help them basically circumnavigate this whole argument of employee versus self-employed. For example, like what happens quite often is someone would go incorporate themselves as a company, and they'd be the only person working for their company. They would do that to take advantage of favorable tax effects because corporations pay less tax than individuals. So what they would do would be they would incorporate their company, and then they would contract their company out to say some sort of employer, like maybe an oil and gas company or whatever. Does that make sense? And then the oil and gas company would pay their corporation would pay them. Now, the problem with that is you run into a problem called, can I erase this? So, you would run into a problem called PSB. So, let's just write this down. If you ever get into public practice, you need to know what a PSB is. So, PSB is a personal service business. So what is a personal service business? It's basically you incorporate a company and you contract all of your services out to one particular company, and the company pays your corporation pays you, so that instead of you paying personal tax at like say 26%, you're only paying tax at around like maybe like 11%. Does that make sense? Okay. So that's PSB. Now, the thing with PSBs is that CRA does not like PSBs because you're creating a tax advantage for yourself that other people that aren't doing this won't have. So because there's this lack of fairness, then CRA would basically deny all expenses for PSBs, and you'd have to basically report all that income that you made from your PSB as personal income. Does that make sense? Okay. So the question then becomes, how do you get around PSBs? Well, the company I used to work for, they hired a lawyer and they got a solution for it. Now, what the solution is a three-way contract. So you have your, if I can spell individual, you have the third party payment system, and you have the company. Okay, so again, this isn't going to be tested or anything. This is just for your own general knowledge to add value to your lives. Sound good? Okay, so what has to happen is there needs to be a contract between a third party payment system and the individual. So what happens is instead of the company that's paying the PSP directly, what the company then does is they pay a third party payment system. So the third party payment system is just some other foreign company that collects money and then remits all that payment that the PSP should have got. It takes that money and pays the PSP instead of the company paying the PSP directly. Does that make sense? Okay, so you have a third party payment system, and there's a contract between the individual and third party payment system. There's another contract between the PSP company and the third party payment system, such that there's agreement that third party payment system is going to be paying the company basically instead of the actual employer themselves. Make sense?
Yeah.
Okay. The third contract is going to be between the PSP and the individual. Okay, so once you have this triangle here, that basically deals with the PSP issue. So the company I work for back in Calgary, they've employed this system for years. When I was, or before the time I started working there, that was 2011, they've been audited twice, and both times they passed their audit. So this does hold water. But again, nobody uses it except for that one company I work for. Does that make sense?
A PSB is the name for the subcontractor's company,
Yeah.
or
yes,
for the
it's a subcontractor's company. So yeah. So it's subcontractor's company. Yeah, that's right. And then the subcontractor's company would then they would contract all the services out to one particular employer like TELUS or and Bridge or whatever.
and the subcontractor really only has one
Yeah.
employee and one owner, and it's the same person.
Yeah, exactly. Yeah, that's what gives rise to the PSP.
And so the subcontracting company is not allowed to pay the person running it.
Yeah.
They have to pay a third-party system.
Yeah. But there has to be contracts and stuff in place.
And so that subcontracting company now, it no longer has a profit because every bit of revenue coming in is being paid to the third-party system.
Yeah, well, they have a profit, but the actual employer isn't paying them personally. They're paying the third party company, and then third party company is paying the PSB.
The third-party company is paying it.
Yeah.
So
So that basically it creates a degree of separation between the employer and the
subcontractor.
and the company.
Okay, so
the PSB company.
the contractor
Yeah.
who's TELUS. So TELUS pays the third-party system.
Yeah.
Third-party system pays the subcontractor, and
Yeah.
the subcontractor pays the individual.
Yeah, that's it.
And this is different because,
We just have degrees of separation.
well, what needed to be separated? All those
Basically-
things.
Yeah, basically we just need separation between the employer company like TELUS and the PSB, as well as the PSB and the individual, and that's where the contracts come into play, as well as the third party payment system.
And so that subcontractor still follows TELUS's schedule,
Yeah.
does everything TELUS tells them to do.
Yeah.
They own their own tools.
Yeah.
They all of their all of their assistants and anything they hire out, that has to be approved by TELUS and trained by TELUS.
Yeah.
They're not really able to make any financial decisions. They probably own their own truck and their own tools, so there is some investment and there's some management that they do, but the opportunity for profit, they can't go and turn around and work for like Shaw
Yeah.
because that's going to be part of the contract. So,
Yeah.
how does a third party system help TELUS not call that an employee?
Because TELUS isn't paying the PSP, it's third party payment system.
So TELUS has all those things, but they don't actually pay.
Yeah. Like I said, it's not really used, but like
That holds water.
it holds water.
That sucks.
Yeah. Yeah, but you know it's there. So yeah. So that's gonna be our little secret on how to get around PSPs. Sound good? Okay.
Can we talk about one more weirdo example?
Sure.
Massage therapists
Okay.
who are subcontracting to like a massage therapy salon.
Uh-huh.
So the massage therapist has no control over their schedule, does not own any tools.
Not necessarily.
Well, I suppose not.
Not necessarily. So like I actually have a client in Airdrie, and he's a naturopath doctor, and he has a massage therapist.
Okay.
So, hey, Mary, what's on up? So what we have here is the massage therapist. They can set their own schedules.
Yeah.
They're also paying for like they're renting out some space, like office space or whatever. So they're renting that out. They're paying rent, but they're also working for the naturopath doctor. Naturopath doctor's paying them, so the naturopath doctor company is collecting their payments and for them and remaining their payments to them. So there can be that kind of relationship.
They usually are able to work in other places though.
Conceivably, yeah, they could.
Hmm.
Yeah. Okay. So does that make sense?
Yeah.
Okay. Alright, any other questions? Are we good? Okay, it's 1:40, let's take a 10-minute break, actually, maybe a 12-minute break, it's 1:30, so let's reconvene at 1:50 and